to our viewers. It is my pleasure to introduce you to Corpus Tax. We are a chartered tax advisory firm operating in Africa. To my right, I would like to introduce you to our CEO and founder, Devon Mariano. Devon is a FCCA chartered tax advisor. He comes with a wealth of experience working on the African continent for various MNCs. To my left, we've got a new addition to our company, Meenakshi Pungavanan. Meenakshi worked in the global business industry for the past 15 years, and we are delighted to have her in our team. To start off with, our team has worked the whole night to bring this short video to you, where we're just going to summarize the key points of the budget. Devon, please tell us, what do you think of the budget that was delivered last night?
All right, thank you, Liselle. Indeed, it has been quite a long night, hard work by the team. Very impressed, very proud of the team as well. And should I say good night or good morning?
Good morning.
Exactly, good morning. So I think that the budget, Liselle, comes with, I would say, no surprises, right? We were actually anticipating that the budget would be quite socially focused.
Which it has.
Yes, exactly. A lot of measures, I would say, were introduced, will be and hopefully implemented to alleviate the burden on low-income earners. And there has been also quite some exciting measures from a corporate tax perspective, but I would say that it could have been better, right? In terms of encouraging investors to come to Mauritius, to invest in Mauritius, right? But one measure actually that everyone was waiting for,
yes,
right? That excitement, right? That excitement was the solidarity levy.
Absolutely.
That was removed, and there was also quite a surprise. Quite a surprise with the new income tax system.
Yes, very progressive.
Exactly. So I would say interesting budget, in view of the context as well, that next year there will be the elections as well. So general feel, I would say happy, but as you know, I'm not always happy, right? I think we could have done better.
Yes.
But I think that has been quite an interesting one. So very welcoming from my end.
Wonderful. With regards to the solidarity levy, you touched on it. Can you explain that a little bit more in detail?
I think if I said no, it'd be quite a surprise, Liselle. But definitely, like I've mentioned earlier, there have been rumors, right, for quite some time that the solidarity levy will be removed. I was not so sure about it.
No.
So I was quite happy to see that indeed that levy was removed. It was indeed regressive in nature. We've seen a lot of advisors talking about it as well. It was painful for a number of taxpayers. And I did actually had a number of questions or concerns that we had rates of 40%. That's actually by far more than the highest tax jurisdiction. It was not 40%, right? The maximum rate was around 25%. But regressive in nature, so not really welcomed and quite criticized. So with the removal of the solidarity levy, I think that's a good message that the government is sending to the market, that the government is listening. They are also concerned about taxpayers. They're concerned about people actually leaving Mauritius because of a high tax rate. So just to put some context to it, when the levy was introduced, it was only 5%.
Yes.
Then we got that famous surprise that it jumped to 25%, and with a cap of 10%. And that was really quite hurting, right? Quite a shock. And the threshold as well was 3.5 million rupees when it was introduced, and that has been reduced to 3 million rupees, that is the exemption threshold. It was punitive in nature. It was punitive in nature. But like the finance minister said when the rate has been increased, we were being called to work together, to contribute together, because of the context of COVID, right?
Absolutely.
And so I think that's why, even if people were not happy about it, there was quite some understanding as to why it was there. But in terms of tax revenue from that levy, I think it was mitigated, right? It was mitigated. So, and the compliance burden to manage this as well, there is a cost attached to it. So, very welcome measure that we found that the levy has been removed. Now, the good part, I would say the nice part of the levy being removed is that dividend income now seems to be no longer taxable. I would say local dividend, right? Not foreign dividend.
Yes.
But foreign dividend is subject to tax in Mauritius. Of course, there are tax credits, etc. I won't get into a course, right? I won't get into a training at this time. But that avoids double taxation, right? Because from a company perspective, profits are already subject to tax at the rate of 15% plus the CSR, which is 2%. So I would say 17%. And then there was the levy that on the shareholder on dividends. So discouraging for shareholders, because that means that their returns are now being reduced, and they would have looked elsewhere to invest. So I think that measure is very welcome from an economic perspective as well. I think local investors will now be more encouraged with an increase in return. And we shouldn't forget that actually, it's not that investors put their money in their pockets, right? They also use that money to invest, to bring it back into the business, to bring it back to develop other segments as well. So I think that measure is going to be quite an interesting one from an economic perspective. So yes, Lizelle, I'm very excited and I'm very happy for our clients as well, because they were concerned about the levy. Now they're not concerned about the levy. I know some of them would be like very happy, maybe with a glass of wine now, with the removal of that levy. And I had questions as well as to, all right, if the government is like removing the levy, what will the government take from us?
Yeah.
So, but it seems that they've actually heard the people. They've heard the taxpayers. They've heard it from investors as well. Like labor cost now is getting more expensive because of that levy. It's already quite hard in Mauritius to find people. And to get people from abroad, knowledge from abroad, to come to Mauritius with a high rate was also a challenge. Especially in our sector, I would say the financial services sector, to get a lot of, to get resources, human resources is a challenge. It is a challenge. And with the removal of the levy and also the reduction in the threshold to get work permit, I think it's a strong message that the government is now sending to the market that Mauritius is open for you, right? Come, work in this country, you're going to be happy. They want you to spend in the country as well, obviously, right? But Lizelle and Meenakshi, I think it's been quite a good surprise that the levy has been removed.
I agree.
Yeah.
I think from the viewer's point of view, you all want to know about the personal income tax. Now, we know that the system is going to be a progressive system. Would you care to explain to our viewers what that means?
Yes, that's quite a change to what we've been used to in Mauritius. Maybe I'm going to start with a negative note.
Okay.
It's quite a bend, right? 0%, 2%, 4%, 6%, 8%, 10%, 16%, 20%. My God, it's like, it seems to be like never ending. I would have seen a much lighter change, like 3-4 pence.
Yes.
But nowadays these things are computed by software, so it shouldn't be that hard, unlike in earlier years. But with the progressive tax system, I think and the rate now is much more known. It's now fixed at 20% maximum.
Yeah, brings more clarity.
Exactly, brings more clarity, and for the lower income earners, I think it's no longer regressive as well. So very much welcomed, unlike the previous system. And we've seen, like explained in the budget speech, that the exemption threshold now has been increased. So what the government is really trying to do is to allow or to increase take-home pay of people. The cost of living has increased, right? It's not unknown to anyone. So that will allow people to get more take-home pay and obviously spend and save as well. And that measure actually, I would say, might increase tax revenue, because if people have more disposable income, then they can spend more.
Absolutely.
If they can spend more, we haven't seen much changes. There hasn't been no changes in VAT, in the VAT rate. So by spending more, the government actually might collect more taxes. So it might mean less direct tax, but more indirect tax. That's going to help the economy as well. So which is not a bad thing. So the change in the personal tax system will have a multiplier effect on the economy. It will actually give a positive mood to the people, to the population. And what we've done as well, Lizelle, so we've actually worked on a simulation, Excel-based simulation that we've included as an attachment in the budget brief, and that we can, if you don't mind, I can actually show how that simulation works. It's quite easy as well to understand. And so let's look at this simulation.
Yeah, I'm sure the viewers would love that.
All right, Lisa, this is actually the income tax simulation that we've prepared for our readers. Our readers of our budget brief can actually have download the simulation. So there will be a link actually in the budget brief. And but bottom line, what we're trying to achieve here is based on current legislation. What is the effective tax rate? And the amendments brought by the budget speech, what is the impact on that effective tax rate? It's quite easy to use. It's not that hard. There's only 4 boxes to fill in. So bottom line, you fill in your basic salary, annual basic salary, annual gross taxable salary, your income exemption threshold, quite easy as well. Just select it. And also you have the possibility to include local dividend income. Why we're including local dividend income is because the solidarity levy actually was taxing local dividend income. And that's what I was talking about earlier, is double taxation. But with the progressive tax system, the new tax system, that local dividend income is no longer subject to tax.
100%.
So what we can see here is a person, a taxpayer, earning a gross salary of 3 million rupees, but no dividend income. So no solidarity levy, because the exemption threshold is 3 million rupees. Now I'm going to change that, right? I'm going to put that 4 million. You would see here that the gross salary is now 4 million, and the effective tax rate is now 16%. And that's the current legislation, right? The current one. And the solidarity levy is now 80,000. So meaning that the take-home pay is 3.3 million.
Mm-hmm.
But if we were to apply the rules, the new rules established by the budget speech, the rate actually drops to 13%.
That is from 16 to 13.
From 16 to 13, exactly.
That's a significant drop.
And if we were to include now local dividend income of 1 million rupees, that's where we get more excited about, right? The effective tax rate under the current rules is now 18%.
Yes.
But under the anticipated rules of the announced by the speech, that effective tax rate drops to 10%. Why does it drop to 10%? It's because now local dividend income is not subject to tax anymore. And with the progressive tax system as well. So I would invite our audience, our readers, to download this simulation, play with it, don't crack it, right? Play with it, put your numbers, see how your net, your take-home pay would be affected. Obviously, Lizel, it's important that you guys are aware that it is only based on the budget speech, right? The announcement. We definitely need to wait for the finance bill to get more certainty of what's really changing and how it's changing as well. So I'm really excited to hear from our readers and viewers as well on how they've used that simulation, how excited they are as well.
Absolutely.
And if there's any questions they may have, they can send us an email. We'll be happy to advise them as well.
Absolutely. Thank you, Devon, for explaining the progressive system to us so eloquently. I'm sure the viewers enjoyed that little bit of good news. Moving on to the global business sector, I'm going to ask Meenakshi to explain what is happening. So, Meenakshi.
Sure, Lizel. With regards to the global business sector, amendment has been brought specifically to the protected cell company and the variable capital company. That is, the MRA wanted to ring-fence the assets and liabilities of each cell. Let me give you an example. For instance, if a particular cell has a tax liability which is payable, the MRA now won't have recourse to another cell to pay that specific liability for this cell. That is, each cell has to manage their own assets and liabilities. That is, similar amendment has been brought with regard to the variable capital company.
Okay.
That is, for variable capital company, each sub-fund has to manage their own assets and liabilities. That is, they cannot have recourse to another sub-fund to pay for their tax liability. Lizel, this is indeed a welcoming measure brought by the government because this will encourage investors to invest in these kind of vehicles, because each cell has got their own shareholders, and it's not great if you got a tax liability from one cell and the other cell which is profit making has to pay for the liability of this cell. So I think, what do you think, Devon, about this?
I think you've summed it up very well, Meenakshi, and there was uncertainty in that space, right? There was indeed uncertainty in that space. And like Meenakshi said, I don't think I need to add anything further to this. This is indeed a very welcome measure. The VCC is actually a new type of vehicle introduced by Mauritius. And I think, having gone through the legislation as well, the VCC structure and the way they're bringing that in Mauritius actually is by far more interesting than the Singapore one.
Okay.
So, but this part was missing, right? That part of that puzzle was missing, and they've actually I think it's a great thing. They've actually realized that this was actually a requirement.
Yeah. It will encourage investors to invest in these kinds of structures.
Exactly, and the VCC is a fantastic structure.
Okay.
Fantastic structure. Of course, it's all about how do you structure it,
Yes.
and ensure that it's well ring fenced. I'm doing some marketing here. So if you guys need advice on structuring, Compass Tax is here, Meenakshi is here, Lizelle is here, I'm here as well. I have a whole team as well to assist you. That's marketing, is that?
Absolutely, I love it. Well, moving on to our last point of discussion, the Tax Arrears Settlement Scheme, otherwise known as TAS. Meenakshi, please can you tell us a bit more about that?
Yes, Lizelle, the TAS has been reintroduced in Mauritius. Like the scheme, it's a good initiative from the government, as this scheme will allow taxpayers who have outstanding tax with the MRA, like all their penalties, interests will be waived by the MRA.
I'm sure they will be happy.
Yes, if this scheme is, if they applied for this scheme, that is, they have until the 31st of December 2023 to apply for this scheme, and they will be able to claim full waiver of the interest and penalties if they pay their tax by 31st of March 2024. So this is a great initiative by the government, because in this way the government will encourage taxpayers to pay quickly.
Absolutely.
But there is one there's one thing in it. All taxpayers who has cases with the
ARC and at the objection, etc. I would presume.
Yeah.
I mean, you are actually highlighting a very interesting point here, Meenakshi, and again from experience, there's I would say there is the willingness of the government to encourage taxpayers to settle their debts, right, and encourage them to pay earlier and get waivers of penalties and interest as well. But sometimes in practice, I've seen taxpayers struggling with the MRA to get waivers of these penalties and interest for petty reasons, right? Because we're actually sticking too much to the books here. It's all about why the regulator is bringing forward that measure, why the government is actually introducing that measure as well. So very welcome measure, Meenakshi and Lizelle. I think once again, Meenakshi well summed up. But in practice, it needs to be, I wouldn't say more relaxed, but I think it's important for the regulator, that is the MRA, to understand the practical difficulties of taxpayers. That's one thing. And secondly, unfortunately, it's not only on the regulator. It's not always on the regulator. The tax is actually an extension, has been extended. But I find taxpayers like on the last day, like they're waiting for the 30th of December. Devon, can I get waiver of penalties and interest under TAS? Come on, it's like I'm on leave. How do you think I'm going to help you out?
You do know that we leave things that we don't want to do to the last minute. Exactly.
So, and all right, if we try to contact the MRA on the 30th, come on, guys, it's like New Year's Eve. I think there is like sufficient time for taxpayers to settle their dues, and if they have cases at the ARC or court or objection, start working on it, right? Just don't wait for the last minute. And then you want some relaxation from the Revenue Authority. Come on, if you're waiting for the 31st to do it, you won't get it, right? So I think it's also on the taxpayer as well, just to make sure they're doing it not the last day, right?
Exactly.
Yeah. Exactly.
Devon, Meenakshi, thank you so much for providing our viewers with the insights. Our team will provide you with further insights into the finance bill once it has been released. Please feel free to contact us if you have any specific questions regarding the budget. But for now, enjoy your weekend.